It's great to be joined today by Tobias Pfüetze, who is the CEO and founder of the Traxia ecosystem. Tobias, it's great to talk to you. You know, you're dealing with an issue that is really an issue for lots of small businesses, even including ours, which is the issue of accounts receivable at lots of small businesses. And businesses like the David Pakman Show and other small businesses, we're mostly funding our operations out of the revenues that we receive. So for us, it's very, very impactful if we have revenue that we're receiving within 30 days of its being earned, or 60 days, or 120 days, because we're turning around and using that revenue right away to sort of fund our operations. So let's start by talking about that problem that you've identified and sort of why that's a problem that you're tackling.
David, thanks a lot for having me here on the show. It's great to be here. As you already mentioned perfectly, it's a huge issue of accounts receivables, accounts payables that are stuck in the value chain and not being liquidated. Yeah, so basically, at the moment, as a small, medium enterprise, you can go to a centralized institute like a bank or a factor, and give them the power to price your assets. And we believe decentralizing this whole value chain and actually having a lot of different institutional investors competing to loan you as a business owner is a much better approach, and gives us market prices for the underlying accounts receivables and payables. And obviously you can get paid faster and therefore pay your employees, your office rents, etc.
Yeah, so there's a couple of options that are sort of currently available to me if I have money that's coming in. In other words, I'm running a responsible business. I'm not overspending relative to revenue, but I might have to wait 60, 90, or 120 days to receive some of that revenue. So I could go to a bank and I could say, well, let's open up a line of credit, for example. And of course, as the business owner, I have to personally guarantee that line of credit here in the United States. I might pay an interest rate that's not particularly favorable to me. Of course, I can also gather investors, right, which we did a couple of years ago, and I love our investors and it's been a great thing. But if every time I need some additional capital, I go and give away or sell a portion of the business, that's also not sustainable long-term either. So talk a little bit about the solutions that you have in mind to this.
So similar to actually invoice auctioning, which is also very popular. For example, you have Market Invoice in the UK, exponentially growing since 2011 in terms of volume of invoices on their platform. We imagine that you can not only give away your invoice to another factor, which basically turns an illiquid asset, your invoice, into an illiquid asset. No, we think using blockchain technology makes it possible to actually create a debt security. Yeah, in our case, we use the Hong Kong law, namely issuing debt securities to professional investors only. And those tokens are then can be immediately traded on a secondary market, and therefore we can provide the institutional investors with a standard product and with a liquid market, and that is our vision and goal. And those two issues are actually the number one and number two issues that have been mentioned by banks in the latest report from the International Chamber of Commerce, why there is not more institutional investment in the market.
Can you talk a little bit about, in the simplest possible terms, as an individual business owner with some money in accounts receivable, money that's been earned but not yet received, what is it that you can do with the Traxia ecosystem?
So within the Traxia ecosystem, as a small, medium business owner, you can access an alternative way to financing with your current books, your invoices, your trade documents, the contracts you have. You upload those documents in a digital fashion to our platform. We evaluate it. We need to make sure that you are legit. So there are some KYC procedures, etc., running in the back. And then we create a digital asset on your behalf representing those invoice and contracts, which can then be traded. Yeah, so the invoice and the trade documents are the collateral for the debt securities that are then be bought by institutional investors.
Talk a little bit about the token, the Traxia membership token. What is its role and how can that be used by individuals who have accounts receivable?
So the Traxia ecosystem has the membership token, meaning when you want to access finance through our platform, you need such a token. To access the technology system, to upload your invoices, etc. And in terms of usability, our technical service provider, Liquiz, also takes the purchasing of such a utility token away from the process. So if you do not own TMT, we will just buy it for you as a business owner on your behalf. And the TMT is actually calculated on a per transaction basis. Yeah. So for, let's say, just for simplicity's sake, you have a 100 euro invoice you upload through the ecosystem, and we charge you 1%. Then you would need to have $1 worth of TMT. Yeah. So it's actually not reliant. What you spend is not reliant to the fluctuation of the TMT, which is a limited supply utility token.
We've talked to a number of CEOs and founders that are building platforms on the Ethereum platform. Now you're building on Cardano, and I'm interested in why and how that's useful to you.
So the talks with the core team of Cardano already started last year, quite early last year actually, and so we figured trade finance is a really interesting use case for the blockchain, like different blockchains. But so we talked further and further, and we really like the approach of developing what they call version 3 underlying blockchain. They use what is called a peer-reviewed software engineering, which we believe is very essential also in terms of their structure, how they set up the whole ecosystem, the computation layer, settlement layer, and currency layer. We believe that will be much better scalable and a true version 3 blockchain in comparison to Bitcoin version 1, Ethereum version 2, and that is obviously useful for us. And on top of that, we are the first investment the Cardano core team did through their investment arm, Mogo.
Can you talk a little bit about whether you see that? I mean, is that potentially at a broader, from a broader perspective, one of the limitations that now a lot of projects like yours will have to contend with, which is sort of the underlying transactional limitations of one blockchain versus another, thinking about Ethereum, Cardano, et cetera? I mean, aside from your specific industry that your project operates in, what do you think the limitation will be for these blockchain-based projects? Is it going to be transaction fees, transaction volume, user adoption, something else?
I guess, interoperability between the different blockchains is very essential, and actually also an issue that is taken into account and actually being solved by the Cardano Foundation via IOHK. And so that also makes us confident in using them. But of course, you're right. It depends a bit on the use case, I would say. Yeah, payments for sure has the transaction speed limitations currently, and probably for some foreseeable time. In our case, it's a bit more about bridging the real supply chain and solutions that are implemented to track, trace, and audit the real supply chain, meaning from the raw product to the final product with the financial supply chain, and making sure that those two maybe different blockchains can communicate to each other, because the transparency gain we have through that is very substantial in terms of pricing the underlying assets, and therefore a win-win for both the supply chain owner and the financial institutions wanting to invest in the assets.
What is the current status of the ICO, and sort of talk us through the various steps and phases of it?
So the current state of the ICO, we're going into the last part of the token sale. Actually, we have good news for the token investors. We managed to get a strategic partner via our operational entity Liquiz, which is Quark Finance. So that allows us to cut down the warehousing facility, because this partner can take that over, and the loan warehousing facility actually made 60% of the hard cap. So we can cut down the hard cap to a bit over 15 million, which incentivizes, of course, not only the old investors because they get more TMT, but also new investors, because we actually not only focus on the fundraising, but actually also building or focusing or doing some operational work, putting the project forward. Before the end of the token sale, we will also have a functional platform that can be used, and therefore our TMT token really has a utility for accessing the ecosystem before the end of the token sale already.
And where is the best place for people to find out more, not only about the project, but also the token sale aspect?
I think the Traxia.co has a lot of valuable information. Obviously, our Telegram channel is very active. There are people asking very in-depth questions, very good questions, and detailed ones. So it's a nice place for you to also dig in a bit deeper and follow the conversations we're having there. We have a lot of I would say a very interesting high quality videos on YouTube. Just to give you a brief introduction, ranging from 30 seconds to a minute, short intro pitches, to a bit more in-depth interviews, such as the one as we're doing. I did another one at the Economy the other day. So yeah, I guess you have a different channels to get the content you like, whether it's video or the white paper you can download on Traxia.co, or just follow conversations we have on Telegram.
We will link to Traxia.co in the video description. We've been speaking with Tobias Pfüetze, who is the CEO and founder of the Traxia ecosystem. Very, very interesting, and really relates to a problem that I know a small business owner like I can relate to, and I know many others as well. Tobias, thank you so much.
Thank you, David.